So in this video, I'm going to go over Salesforce stock and see whether or not it's actually a buy low or if this is just basically a sinking ship. Now they've had a rough year so far. They're actually down 40.78%. In the past full year, they're down almost 44%. And over the past 5 years, down 37.9%. If you compare that to the S&P 500, the S&P is actually doing fairly well. So it's even more concerning that Salesforce is doing pretty badly in a market that's actually been trending upward over the past 5 years. Now, one thing to keep in mind is they do actually offer a decent dividend. It's not like a super high one. It's not one of those where, oh, well, you get to retirement age and you're ready to trade in your VOO stock for, a combination of dividend stocks like Salesforce. Salesforce, I don't think it really pays enough to just be like a retirement stock for just dividends, but for the sake of stability, it's nice to see around 1%, even though their growth has been terrible in terms of their stock price. PE ratio is actually quite low. It's under 20, which is good at 17.38. If you actually look at their year over year revenue, it's up 13.27%. If you look at net income, up 36.73%, profit margins up, earnings per share is up, EBITDA is up. So those paint a pretty positive picture, actually. If you look at assets versus liabilities, it could be worse. It's not necessarily what I like to see. I'd like to see closer to a 2-to-1 ratio or better. But, as far as a return on assets and return on capital, I would say kind of mediocre, honestly, in those areas. If you look at return on assets, could be better. Return on capital, not too bad, but still, like I said, it's not really ideal of what I'd like to see if I'm really looking for a buy now scenario. As far as maybe turning things around in the past 3 months, they're definitely not doing that so far. They had a pretty nice spike around June 1st, but since then, they've basically just been in a downward spiral as they have been, and they're down almost 19% in the past 3 months, while the S&P 500 has actually been up a little bit. If you look at what hedge funds are doing, which of course their entire job is to make good trading decisions, Q1 2026, 43% buy, 57% sell. If you look at Q4 2025, 51% buy, 49% sell. So you can see they've been pretty split the past few quarters. Before then, Q3 2025, mostly buying, but still a lot on both ends all the way back to, the past few years. If you look at what insiders are doing, some of them are actually buying low right now. Analyst ratings actually give them a 74% buy score. That's actually kind of surprising to me. That's out of 54 Wall Street analysts, holding 22.2% score, and 3.7% say it's a sell. Short interest has been going down over time. If you look at earnings, their earnings don't seem to really be the problem here. They did raise guidance since the same time last year. If you look at Q2 26 versus Q2 27, and they've been pretty easily beating on their estimates over the past few quarters. Their EV to EBITDA is 11.13, which is actually pretty reasonable, and it says they're ranked worse than 54.71% in the software industry, but I don't really worry too much about that. If you look at their forward PEG ratio here, if you actually account for growth and things like that, PEG ratio is actually 0.73, which is actually quite a bargain. It's actually under a 1 here. So there are a lot of indicators that say it's a bargain right now. If you look at the leadership here, their employees give them a 4 out of 5 star rating. 79% of employees recommend working here to a friend, and 79% approve of Mark Benioff, the man making the big decisions here, as the CEO. All good numbers. Another very important thing, if you believe or don't believe in them, one thing you have to consider is their GCIS sector, so that you're not too much into one sector in your portfolio to where you're taking on, really high unnecessary risk. Now, obviously, you can do that if you want. If you want to go all in on tech, that's fine. That's your life. But I can't give you financial advice. I'm just saying the way I look at this is I don't want to load up too much on any one sector. And they are in the information technology sector, which of course you're competing with all the major AI stocks right now, all the major SaaS and other software stocks. So it's very competitive, and that's one of the biggest growth sectors out there. This is another SaaS stock that is just, it's a hard call to make. This is one where you would see on like the subreddit on value investing, where everybody's like, look at the earnings, everything is lined up, they have a low PE ratio, this is a buy opportunity. If you actually keep track of how value investors have been doing over the past few years, it has not been good. It's pretty much been a bloodbath for value investors. They're always trying to time the market and pick when a stock that has good fundamentals as far as numbers like PE ratios and EV to EBITDA ratios, PEG ratios, all these different things, all the ratios. Like they're trying to time this, but it's not been working out. The market seems like it just doesn't make sense for fundamental investing anymore. Of course, this could also just be a bubble like some of the doomers are saying, and this could pop at any time, but they've been predicting this for so long, it's hard to say when or if that will happen. AI, of course, is a major threat to something like Salesforce, but at the same time, vibe coding your own alternative to something like this is very risky, and it's just not going to be as stable right now. One of the reasons I'm not buying something like Salesforce is because I think the technology stocks that I already have are going to continue to outperform Salesforce. So I don't want to sell a portion of my tech stocks for buying Salesforce low. Some people might want to do that. Some people might really believe that this is one of those value stocks that really could take off. But you are really shooting a risky shot by doing that, in my opinion. Now, we had a good amount of Wall Street investors saying that they see this as a buy scenario, which is kind of surprising when I also just reviewed Adobe, which is kind of in a similar boat in many cases, although a different business. And many of those analysts had Adobe as either a hold or a sell. If you're selling Salesforce this low, maybe you would regret it. Maybe you'd feel like, well, I'm pot committed, I might as well just have it long term and see if it turns around, see if this bubble pops and if that actually helps or just makes it worse. If you were to try and convince yourself to sell right now, you're basically just saying there's no way they can turn this around. It doesn't matter what their earnings are lately. AI is the next thing, and it's only a matter of time before AI can fully replace software engineers and an entire company that's built around a SaaS product, and then that will be the end. I don't know if I'm that doom and gloom yet, but I'm definitely not, in my scenario, willing to put money into a software stock when I already have enough tech as it is and they're all doing pretty well. Obviously, none of this is financial advice. Everyone's portfolio is different. Your age, your risk tolerance, all of that could be totally different than mine. But hopefully this helps you maybe make a better decision, and I'll see you in the next video.